Thanks for joining us for a review of the March 2019 Purdue CME Group Ag Economy Barometer results. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'll review with you briefly the overview of the results from the March 2019 survey. The Ag Economy Barometer did decline this month to a reading of 133 versus 136 a month ago, and the decline was largely the result of a decline in future expectations on the part of producers. The Future Expectation Index declined from a reading of 145 last month to a reading of 139 this month. The index of current conditions actually was pretty flat with the previous month at a reading of 120. Producers were a little more favorable towards the making large farm investments this month. The large farm investment index rose to a reading of 57 versus 50 a month ago. But that optimism did not carry over into farmers' perspective on farmland values. When asked about their perspective for farmland values 12 months ahead, the percentage of producers expecting a decline in farmland values increased to 25% from 20% a month earlier. When we asked producers about their expectations about their farm's financial performance in 2019 versus 2018, roughly 6 out of 10 said that they expected performance to be about the same as last year, but 1 out of 5, 20%, said they actually expected to see a decline or worse performance in 2019 than in 2018. To learn more about the level of financial stress that exists in the U.S. ag sector, we asked farmers whether or not they expected the size of their operating loan in 2019 to be about the same, larger than, or smaller than it was in 2018. And 22% of them said they expected to have a larger operating loan in 2019 than they did in 2018. We followed up and asked those people, the people that expected to have a larger operating loan, what the reason was for that increase in the size of their operating loan, and 21% of them said it was because they were carrying over unpaid operating debt from prior years. We asked these same 2 questions in January, and the responses were quite similar, and the result is an implication that about 5 to perhaps 7% of U.S. farms are suffering some financial stress using that unpaid operating debt being carried over into the current year as a measure of stress. We also asked producers a little bit of extra information about their perspective on ag exports. We've been asking people about ag exports and their perspective about what's going to take place over the next 5 years a number of times. And this month, the percentage of people that have said they expect to see an increase in ag exports over the next 5 years rose slightly to 68% from 67% in February. But importantly, that percentage is quite a bit higher than it was last summer when it actually dipped below 50%. So people's perspective is a little more positive on exports. We followed up and asked people if they expect to see the trade dispute with China ultimately being resolved in a way that benefits U.S. agriculture. And over 3/4 of the respondents in our survey said they did expect that trade dispute to be resolved favorably for the U.S. So we followed up and asked people whether or not they thought the soybean trade dispute with China would be resolved before July 1. And over half, 55%, said they thought it was unlikely that the trade dispute would be resolved that quickly. That wraps up our analysis for this month's Ag Economy Barometer survey. The next Ag Economy Barometer will be released on May the 7th. Check back for an updated video, and of course you can always find the complete report at purdue.edu/agbarometer. Thanks for joining us.